Hello everyone, Jesse Webb, TradersPro. Market conditions are bullish in a bull market. Still continuing this overall uptrend. There are some significant shorter term cracks though that I want to talk about today. We are seeing still momentum, not extreme. It had been, it's hovering back and forth inside this overall range, which is fine. That's typically quite normal for momentum to run up to an extreme to the upside and then pull back into a trending zone. That ultimately is what we want to see. What we don't want to see is this starting to happen here, which is breadth continuing to get worse as major market equities or major market averages start to continue to go higher. We've talked about this before that the major market averages are just really top heavy with a handful of stocks, and those are the ones that are continuing to do well. Think Microsoft, Nvidia, Google, Netflix, Tesla, although some of those stocks have not been doing so well recently also. Seeing some cracks in the overall trend. Also seeing buy-sell ratio accelerating to the downside, which is at 0.4 right now. If we glance at that also on the sectors, you can see that this 0.4 across the board when we're looking at these different sectors. We've got buy-sell ratio even in the strongest sector, construction, which is it's about at par. It's about 1, but is less than 1 even in the strongest sector. So there's just some weakness in this overall market structure in terms of the breadth. If we take a look at sectors, we are seeing a few more sectors tick back down at basic materials, real estate, utilities in this downtrend, and a couple of other shorter term downtrends shifting here as well. Financials and energy. Commodities, interesting, have all reversed. They've all started to head back down again. If we take a look at gold, we've got a new sell signal or a downtrend. It's been playing with this support zone right here, so it certainly could have some volatility around this zone in this range. And also oil, if we take a quick look at that, has also rolled back over and is heading lower, and now in that bottom momentum, that downtrending momentum zone here, just like the uptrend momentum zone is up here, this downtrend momentum zone works the same way. So we could pardon me. So we could see oil also continuing to trend lower. If we take a look at a couple of ideas in terms of hedging yourself or looking for opportunities for reducing risk if there's any downturn on the horizon, or just profiting from downturns. One way to be able to do that is through inverse ETFs. We've talked about these before. Well, a couple to consider. One to consider here is the inverse of the TQs or the triple Qs, which is the NASDAQ 100. This is opposite that, and it's leveraged by 3x. So if NASDAQ 100 drops by 1%, this is going to go up by 3%. Okay, so it's leveraged by 3 times the inverse. Okay, so it's SQs is the symbol. If NASDAQ drops, this is going to go higher. The other one to consider is the S&P 500 version of that, SPXS. These are probably two they're going to work. They're fine in terms of what to be able to utilize to be able to hedge. You may get a little more bang for the buck if tech rolls over a little bit quicker. At the same time, this is essentially looking for as a hedge. Markets could continue to go higher, but in case of a reversal, there's a way to be able to do that without shorting, without utilizing options, and you can just very simply go long one of these leveraged inverse positions. Let's take a look at a couple of muscle stocks here. Still seeing some tech stocks and some biomed stocks jumping in there. BHBN, a little bit better looking pattern. Put some volume back into that. Nice looking uptrend in that overall momentum zone. ALXO, also a nice pattern here. Big breakout early in October, and it's continued to trend higher with some nice support around that $12.50 range, and looking like it wants to break out and continue higher here as well. That'll do it for today's update. Everybody have a fantastic day today.